This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Bitcoin breakout, the rally in the cryptocurrency speeds up. It's all the talk on Wall Street, but should buyers beware?
Fear of missing out. Is that what will push the market even further into record territory?
All real estate is local, but if you own a less expensive home, you might be in the money. Those stories and more tonight on Nightly Business Report for Wednesday, November 29th.
Good evening, everyone. The Dow closed at yet another record today. More on that in a moment. But we begin tonight with Bitcoin, the controversial cryptocurrency. Now, you may know what it is, you may not. But today, everyone was talking about it, from people at bars to taxi drivers to Warren Buffett, even Katy Perry. And the front page of the Wall Street Journal had something to say. Part of the reason is that Bitcoin has had a meteoric rise. Today, it zoomed past 11,000, surging more than $1,000 in just 12 hours. And it is up about 1,000% since the start of the year. But as quickly as it went up today, it lost some gains. Retail investors are taking notice. Now there's a push underway to create an ETF. But as Bob Pisani reports, it isn't without risk.
Bitcoin is up more than 50% this month. It passed the $11,000 mark before falling back today. So what's exciting investors is the expanding derivatives market for cryptocurrencies. It's adding some much needed legitimacy to this whole space. Last month, for example, LedgerX, it's an institutional trading and clearing platform. They began trading Bitcoin options. That was a big advance. Now the Chicago Mercantile Exchange, the CBOE, and the NASDAQ all are set to roll out Bitcoin futures soon. This is good news. Bitcoin futures will enable traders to short Bitcoin. That's a welcome development. Another piece of good news. With the passage of time, there's more platforms, there's more participants, there's more maturity for these cryptocurrencies. But does that make Bitcoin, for example, more valid? The SEC says not necessarily. There have been several attempts to create Bitcoin ETFs this year, and they've all been turned down by the SEC. The SEC regulates ETFs. So here's the problem. The SEC says Bitcoin is an unregulated market, and because of that, they won't be able to enter into any surveillance agreements between other relevant agencies like the CFTC. You can't really blame the SEC for being worried. If Bitcoin is really unregulated, in the SEC's eyes, it would be subject to manipulation and fraud, and giving an exposure to a regulated market like the ETF business exposes the SEC to a lot of potential problems. So here's the question. What would it take to be a regulated market? Now, it's possible that establishing a futures market might go a long way toward addressing the issue. Maybe, but think about this. Bitcoin itself was designed to be unregulated. While the blockchain has not been hacked, the platforms that support the cryptocurrencies have been hacked. And no one is necessarily watching over all those groups in a coherent, regulated manner. So you can see why the SEC is concerned. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Jack Howe joins us now to talk more about the frenzy behind Bitcoin. He is a columnist at Barron's. Jack, welcome. Nice to have you here.
Thank you. Good to be here.
What is your take in the, one about the volatility that we've seen in Bitcoin and the meteoric rise recently in the cryptocurrency?
Well, I think you nailed it, frenzy. You know, when a stock shoots up, we ask ourselves, what has happened to fundamentally change the value of the business? But this isn't something that can be traced to a business. It doesn't have any cash flows. It doesn't sit up at nights thinking about ways to make itself more valuable. This is a purely speculative instrument. I think what's really happened here is in the early days of this, buying in Bitcoins was restricted to hobbyists and some people with ill-begotten gains out there. We've all heard stories about drug trafficking and so forth using Bitcoins. But now it's expanding to a more generalized audience. People are seeing, they're hearing about their friend that bought into Bitcoins early and has made great money, and they want in too. And there's more exchanges that are popping up. And so we could see this frenzy continue for a while. You know, when the time comes when the person sitting to the left and right of you both own a little bit of Bitcoin, I suppose I suppose the party's over. But until then, there's no telling how long this will continue.
I was speaking yesterday to a couple of investment managers, and they said the question they get asked more than any other is, should I buy Bitcoin? They're both equity managers. So let's be clear. What is Bitcoin? Is it an asset class? Is it a store of value? Is it a means of exchange? Is it all three? How legal is it?
It's such an important question. They call it a cryptocurrency or a digital currency. But look, the last thing I want from a currency, if I'm saving money in the bank, is to have a tenfold change in value in the space of a year. So it doesn't have nearly the stability for that. It's not an investment because it doesn't provide you any type of cash return. I'm not sure. It's not a collectible. It's not scarce enough. So I really think Bitcoin is the purest speculative instrument on the planet right now. The supply of it is controlled by a predetermined program that increases according to a formula over time. So there's no government or central banks saying to themselves, how much supply should we create of Bitcoin? It happens automatically. You've got that pretty tight, constrained supply over time, and just more and more people wanting to buy in because they see they see others buying it.
One of the things that I'm curious about, and admittedly maybe a little bit worried about, is if indeed there becomes a futures market in Bitcoin, or if there is an ETF, as Bob said there might be, in Bitcoin, what is to keep my mutual fund or my money manager from buying that ETF and exposing me to Bitcoin? I mean, the individual investor may say, oh, I'm going to stay away from that. But if there's an ETF out there or a futures market out there, they may inadvertently become exposed.
I think you certainly want to ask the question of any fund that you're invested in and whether they have plans to buy this. I notice we see a lot of excitement around names like the CME and the NASDAQ being attached to Bitcoin with derivatives. If you notice what these big institutions, everybody says the institutional money is getting in. What these institutions are doing is they're attaching themselves to the transactions. They're collecting a fee here and a fee there. They're not putting their own capital at risk. So I don't see a time right away where we're going to see institutions want to put up a lot of capital at risk on something that has had this sort of rapid run-up in price and doesn't really attach itself to any fundamental peg of value.
That is a very interesting point. Thank you so much, Jack. We appreciate it.
Thank you.
Jack Howe with Barron's.
Well, as we reported, the blue chip Dow index finished at a record today, helped by a rise in bank shares. Technology and the NASDAQ went the other way, though, falling sharply. The Dow advanced 103 points to 23,940. NASDAQ off 88, big loss there, more than 1%. The S&P fell almost a whole point. Despite today's mixed market, investors want to know if the climb higher for stocks will continue over the next month and into 2018. Mike Santoli takes a look.
After stocks' latest surge to record highs heading into what's often one of the strongest months of the year, Wall Street is now asking if a market melt-up is underway. There's no set definition of a melt-up, but it usually describes a market that levitates quickly and steadily as investors feast on good news and traders chase the rally for fear of missing out on further upside. The Dow Jones Industrial Average is already up 20% this year, and good news abounds. Third quarter GDP growth was just revised higher. Corporate profits are up more than expected. Consumer confidence hit a 17-year high, and now Wall Street has become captivated by chances for a corporate tax cut. After going most of the year without directly pricing in the effects of a lower corporate tax rate, the market in recent days has placed more bets on companies likely to benefit most: banks, smaller companies, and other domestic businesses. So it would not be surprising if a sturdy but sometimes plodding bull market became even more generous for a while. Yet Wednesday's market action hinted at an alternative to the melt-up scenario: a rotation of cash into those tax cut beneficiaries and out of the huge global growth stocks that have done best through 2017, including the giants of technology. Whether it melts higher in a big final flourish for 2017 or stalls from here, the market this year has been one of the most rewarding in history, measured by the size of the gains compared to minimal downside pain along the way. So the question as we enter 2018 might not be about a melt-up, but whether this is about as good as it gets. For Nightly Business Report, I'm Mike Santoli at the New York Stock Exchange.
It's usually all about the economy, and today investors learned that the economy grew at its fastest pace in 3 years. Here's Steve Leisman.
The U.S. economy got an even better report card for the third quarter than the one that was first sent out. The government revised up its estimate of third quarter growth to 3.3% from 3% originally reported. It's the best economic showing since 2014 and marks the second quarter in a row of at least 3% growth. The CNBC Rapid Update estimate for the fourth quarter shows forecasters expect the economy to remain strong in this quarter as well. Fed Chair Janet Yellen, in what was likely her final testimony before Congress, said today that it looks like the economy is hitting another gear.
The economic expansion is increasingly broad-based across sectors as well as across much of the global economy. I expect that with gradual adjustments in the stance of monetary policy, the economy will continue to expand and the job market will strengthen somewhat further, supporting faster growth in wages and incomes.
Yellen's big concern is that the economy is yet to hit the Fed's 2% inflation goal. But she says she thinks it will get there, and she sees early signs that wages for average Americans might be on the rise. The Fed in its Beige Book report on regional economic conditions said labor markets were tight around the country. It found, quote, many districts reported that employers were raising wages as well as increasing their use of signing bonuses and other non-wage benefits to retain or attract employees. The next key economic report card comes a week from Friday with the November jobs report. That's the last jobs report before the Fed meets and, as of now, likely decides to raise interest rates in mid-December in response to better economic growth. For Nightly Business Report, I'm Steve Leisman.
Well, the government report on GDP also showed that corporate profits are near an all-time high. Adjusted earnings rose more than 4% in the third quarter to an annual rate of more than $2 trillion. That's just slightly below the peak reported back in 2014. Financial services companies accounted for 2/3 of the increase.
Home sales bounced back in October. Pending home sales, which are contracts signed but not yet closed, rose thanks to pent-up demand from hurricanes in the south. But sales in the rest of the nation were not as strong as record low supply pushed home prices higher, especially where demand is the greatest. Diana Olick is in Washington.
Buyers came back to the housing market in October, but not everywhere. It was mostly in the South, where they'd been sidelined during two major hurricanes. The Northeast and Midwest saw small gains, but the West did not. And that's because supply is tightest in the West and prices are high. Inventory is at the lowest since 1991 nationwide. That's when the realtors started tracking it. And prices are heating up even more, especially on the low end where supply is lowest. In fact, the bottom third of the market is seeing price gains at twice the pace as the top third. That's according to Zillow. Nationally, prices are up just over 6% compared to a year ago, but on the bottom third, they're up over 8%, and on the top third, barely 4%. The same is true locally. In Miami, the bottom tier of the market is seeing prices up nearly 10%, but the top up just over 2%. In Boston, homes at the top of the market are seeing prices up 4.5%, and at the bottom up 8%. And in Atlanta, price gains at the bottom are 3 times what they are at the top. So if you own a cheaper home, you're seeing your investment gain in value much faster. Of course, you only realize that gain when you sell, which very few homeowners seem to be doing today. For Nightly Business Report, I'm Diana Olick in Washington.
Oil prices fell for the third straight day as investors try to figure out whether the world's major oil producers will reach a deal to extend production cuts. Steve Sedgwick is in Vienna tonight.
A big day of shuttle diplomacy for oil ministers in Vienna on Wednesday. What is at stake is all the gains that have been made over the last 12 months to drag prices from the low $40 a barrel level up to above $60 a barrel. It's been a largely successful strategy for OPEC and their non-OPEC oil-producing allies, including, of course, the key biggest player in the world, Russia, which currently produces over 10 million barrels a day. They took 1.8 million barrels off the table every single day over the last 12 months. The question is how long they need to carry on doing that strategy to get the market into where they believe there is balance between supply and demand with lower inventories. We understand various options were put on the table today at the Joint Ministerial Monitoring Committee here at the OPEC Secretariat in Vienna, but no concrete word yet on a common path going forward. Paths could include a 9-month rollover to the end of 2018 of the current strategy, or indeed a review of that strategy at the half-year stage stage as well. What remains to be seen, though, is whether we're going to see a accord between all these ministers at the whole meeting on Thursday here in Vienna. But oil markets are watching, and any dissent, any fudges could see prices go right back down again. This is Steve Sedgwick for Nightly Business Report in Vienna.
Still ahead, why the CEO of AT&T says he is digging in his heels and ready for a fight.
AT&T's CEO is ready to fight to win approval for its merger with Time Warner. Randall Stevenson reiterated his case for the $85 billion deal as the Justice Department alleges the get-together would break antitrust law. He spoke today with Becky Quick at the Economic Club of New York.
This particular case, the Department of Justice chose to file the suit, and so we see absolutely nothing in this case that is anti-competitive, lawfully anti-competitive. And so as a result, looking at the facts of the case, we feel like we have a darn good case, and we feel like this is one worth taking and pursuing into the courts.
Julia Borston is following the story from a media and technology conference in New York. So, Julia, what is the sense about what this might do to deal-making in the industry?
Well, Tyler, here at the Business Insider Ignition Conference, there's been a lot of talk about what's next for media M&A. I spoke to Discovery CEO David Zaslav. He predicted we'll see more vertical deals, vertical being similar to what we see with AT&T and Time Warner, content distributors interested in buying creators. He says that distributors are going to be looking for an advantage.
More and more, they need great content to differentiate.
But does that mean that you'd be interested in selling to one of them?
No, but I think it means it's possible. I mean, that's possible. But what's more likely is the reason that we bought Eurosport, the reason that we bought the Olympics, the reason we're buying Scripps, is all of that content we own on every platform.
Lachlan Murdoch, the chairman of 21st Century Fox, also spoke here today. He dodged questions about whether he's interested in selling part of Fox, but he said that subscale businesses, not including Fox, need to merge to compete. Sue and Tyler?
You know, Julia, there was another big media story today, and that is Matt Lauer of NBC News. He was fired from NBC News for inappropriate workplace conduct. But the Today Show, which he was one of the co-hosts of, is among the most profitable of television franchises. So how big of a financial blow, if you will, is that to the network?
Well, look, it's still too soon to say exactly what kind of changes are going to be made at the show, but Matt Lauer was fired, and it is a major shakeup for the Today Show. NBC News chairman Andy Lack saying a complaint against Lauer was filed by a colleague, which prompted a review. Lack saying, quote, while it is the first complaint about his behavior in over 20 years he's been at NBC News, we were also presented with reason to believe that this may not have been an isolated incident. Now, Lauer was one of the highest paid men in television news. Last November, NBC signed a new 2-year deal with Lauer to continue paying his salary, which was reportedly more than $20 million per year into 2018. And Lauer is really credited with helping NBC maintain its lead among the morning shows in the valuable 25 to 50-year-old demographic. The show has more than 4 million Americans tuning in daily. Now, the Today Show brings in far more ad dollars than its rivals. The first 2 hours of the show, which Lauer co-anchored, generating over $610 million in ad revenue just last year, according to Kantar Media. Now, of course, Sue and Tyler, this comes just a week after a rival show, CBS This Morning, fired Charlie Rose, also following the discovery of misconduct. So we'll have to see how this changes everything or anything in terms of ratings and ad dollars, et cetera.
Julia, thank you. A busy day in your world. Julia Borston in New York. Well, Comcast, of course, the parent company of NBC Universal, which produces this program.
Chipotle is searching for a new CEO, and that's where we begin tonight's Market Focus. Founder Steve Ells is stepping down from his role as chief executive officer at the burrito chain, saying it's the right thing to do for shareholders. The company has formed a search committee and says Ells will become executive chairman once the search for a replacement is found. An E. coli outbreak back in 2015 devastated the restaurant chain, and the company has struggled to win back customers ever since. Shares rose more than 5% to $301.99. After 6 quarters of declines, Tiffany's reported a rise in same-store sales in the Americas. The jeweler said there was strong demand for lower-priced items and high-end diamond pendants. Sales in foreign markets slipped, with the exception of China, but the company still topped expectations for profit and revenue. Shares were off, though, more than 1.5% to $92.55. American Airlines is scrambling to find pilots for the upcoming holiday travel season after a computer glitch allowed every pilot to take vacation at the same time. To remedy the scheduling issue, American Airlines is offering pilots 150% of their hourly pay as an incentive to work those dates. Shares were up a tick to $49.25.
Nokia reportedly preparing a takeover bid for Juniper Networks. After the bell, CNBC reported that Nokia's potential deal would value the networking company at about $16 billion. Nokia shares initially rose in the extended session, but finished the regular day down a fraction at $5.02. Meanwhile, shares of Juniper Networks took off on the news and ended the regular session up 5% at $29.61. After the bell, the apparel company PVH said sales rose above its own guidance, even as the company's North American businesses were impacted by the hurricanes. PVH said it is seeing continued strength in its Calvin Klein and Tommy Hilfiger brands, and it is raising its full year 2017 outlook for earnings and sales. Shares initially higher in after hours. They closed down marginally in the regular session at 137.14. Coming up, driving into the future.
Self-driving cars, electric cars, the newest models turning heads here at the Los Angeles Auto Show. That story coming up on Nightly Business Report.
Residents of a wealthy area in San Francisco are getting their street back. Literally, the city's Board of Supervisors overturned the 2015 sale of Presidio Terrace, a privately owned street used by a few dozen homeowners. As we reported, the residents did not realize that their homeowners association had not paid a $14 a year tax bill for decades. A couple then purchased the street and its sidewalks for $90,000 2 years ago. Last night, the agency said the city's tax collector was at fault and not the residents.
This week, the LA Auto Show kicks off with the latest cars and SUVs from automakers around the world. And increasingly, the cars come with the technology to do some or all of the driving. Phil LeBeau is in Los Angeles tonight.
With all the glitz and glamour you would expect in star-filled Southern California, the LA Auto Show shines with luxury models loaded with new technology, like BMW's concept car, the iVision Dynamics.
It is a taste of the future, but a lot of the technology in the car will be reality, not like in the future in years. It's worked on as we speak.
For Audi, the A8 is an established model updated with features that allow the car to do more of the driving.
What is the scenario is I'm sitting on the 405, gut-wrenching traffic, bumper to bumper to bumper. I'm incredibly distracted because I'm on the phone, I'm taking calls. That's when accidents happen, and that's the stuff that can be avoided with this technology.
Since California is ground zero for the development of self-driving cars, it's not surprising almost every automaker is working on autonomous drive technology, even though we may not see self-driving cars for several years.
Very realistic time frame could be 2021. That's what we are seeing.
And you believe the market's ready to embrace this?
Absolutely. I think there is a lot of people who would like to use the commute time for something more productive than sitting watching the steering wheel.
While electric and autonomous vehicles may dominate headlines, Americans still want their SUVs, which is why Subaru is rolling out its first 3-row SUV. And the best news at this year's LA Auto Show may be that sales of new cars and trucks remains robust, with few in the industry expecting a drop in demand. Phil LeBeau, Nightly Business Report, Los Angeles.
And that is Nightly Business Report for tonight. I'm Sue Herrera. We'd like to remind you that this is the time of year your public television station seeks your support.
And I'm Tyler Mathisen. We thank you for your support. Have a great evening, everybody. And we'll see you back here tomorrow.